Hello, everyone. This is your market update for January 21st, 2026. Today, we're going to start with the gold chart, currently trading at $4,872 in futures. We're about $125 away from that critical 5,000 level. What happens at 5,000 is anybody's guess. I have a sense that we may be nearing a top, and I'll explain why. Number one, this trend line here has pretty much capped most of these rallies since the accelerated uptrend began in late 2024. We are approaching it now. Another indicator I look at when prices get incredibly overbought is this here. I'll switch you to this chart. I'm going to get rid of the trend line. But this white line here represents 28% above the 200-day exponential moving average. And usually, when prices approach this level or breach it briefly, that has signaled an intermediate top and, at a minimum, a consolidation. But sometimes it can also lead to a sharp pullback. We kind of briefly went above it here in October, it pulled back. To my surprise, we are back at it again, now nearing that 5,000 level. So right now, prices are above that level, and that level exactly is $4,855. It's not uncommon for prices to breach it briefly and then pull back. Every once in a while, we will see prices accelerate above that level. And usually that only happens into a major blow off top. And I'll take you back through some examples of that. So, we breached it here in October 2025, almost tagged it in April before we went into this pullback. But the time before that, well, I think was around 2011. I had the surge here in 2020, didn't reach it there. I'm going to keep taking you back here. Tagged it in 2011, and that was the bull market top. If we go back here, fell short here in 2009, tagged it in 2008, and that was the top for that cycle. And then we had a really sharp, I think this was about a 30% correction. Briefly breached it here in 2006, which led to that really sharp 20% correction. And then we'll continue back. I think the next time after that was, I think, in the 80s. Yep, 1982 had a sharp downtrend, got a really explosive rebound, briefly breached it here in 1982, and that marked the top for quite a while, frankly. And then this is the one runaway move, breached it here in 1979. And then continued above it into the January 1980 peak. So this basically stayed above it here from September of 79, was below it here briefly in November during the consolidation, but more or less stayed above it here for a solid 3 or 4 months. And that was a final blow off top, and prices didn't take out the 1980 peak, I think, until 2007 or 2008. So this was a 27 or 28-year top. So usually you don't want to see prices stay above that for a prolonged period. If we go back, bear with me here. Here we are testing that level again. My guess is we might breach it a little bit and then roll over and consolidate. If we were to see this extend above it, kind of like we saw in 1979 into 1980, and stay above this for several weeks and into several months in a row, then that would tell me that we are in a final parabolic blow off rally that could take us, several thousand higher. Frankly, this is not my base case, but if prices were to stay above this level for an extended period, then I would have to switch my view into that we are into a blow off top here that could take us, who knows, up to maybe 8,000 before we see a correction. But right now, I'm looking for prices to test the 5,000 level, maybe breach it briefly, and then we'll probably have that pullback or consolidation. Over to silver, currently trading at $94.55. Again, we're very close to that 100 level. We are seeing a ton of physical selling. I pointed out in yesterday's newsletter that people are coming out of the woodwork to sell their silver. Some bought it recently, some bought it a long time ago and have held it for, through the bear market that lasted probably 14 years. and now they're offloading it, and eventually we'll see prices stabilize. But right now, dealers and refineries and wholesalers are getting swamped with physical supply, and eventually, I think we're going to see a pullback here of between 30 and 50% would be my guess. So we could come back to the 70 level. That's a possibility. Could be a little bit deeper than that. And in the meantime, prices could spike above $100. Anything is possible. But I think with gold testing 5,000 and silver testing 100, this seems like a logical point where we see prices peak and put in a multi-month or even multi-quarter top. Over to platinum, currently trading at $2,488. Really got to get a couple closes above 2,500 to break out. We had a really strong December, so this is consolidating a bit longer. But if we get a couple closes above 2,500, then I think we could see maybe 3,000 before this turns into a more significant pullback. GDX finished up yesterday 5.7%. We're above the upper channel boundary, and we are nearing the 105 to 112 target. We could see 105 today. That's a possibility. But if gold corrects, then I think miners will correct as much, if not more. But in the small chance that we do go into a parabolic blow off top, I suppose miners could have much more room to the upside. Juniors are in my target range between 135 and 145, closing yesterday at 136 even, nearing the upper channel boundary. I think we're probably getting pretty close to a top here in gold juniors. And then SILJ, my target was 35 to 40, finished yesterday at 35.34, and we're nearing the upper boundary of this trend channel as well. And I think we're probably getting close to a top here. If we do get a really sharp pullback in silver, 30% or more, I will be looking to accumulate silver miners, probably silver juniors. I think they could have some strength ahead of them. Over to the S&P 500 futures, 6,818, closed yesterday below the 50-day EMA, seeing a little downside follow through. If we get a couple more closes below the 50-day, then I think that would support at least an intermediate degree top, and we could come down to test the November low. And as I stated in the weekend newsletter, if we see a decisive breakdown below that level, which is around 6,529 in this chart, then that would support a more significant breakdown that could take us lower into mid-year. Maybe we see a 10 to 20% correction. Lastly, Bitcoin currently trading at 88,679, closed below this short-term trend line. This could be the beginning of the next leg lower. I'd like to see a couple more decisive closes to confirm, say below 84 or 85, I think would help that scenario. Overall, I still think we are probably about 3 months into a 12-month bear cycle that should bottom maybe in the third or fourth quarter of this year. So that's it for now. Have yourself a wonderful day, and we'll talk to you later.